Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. I've got a very good friend of our show in Rob McEwen. I always like bringing Rob on because he's very good at explaining what his company, McEwen Mining, is doing. But I also believe that he has insights due to his long career of many successes in the mining sector for our investing audience. But Rob, thank you very much for joining us again.
Good to be on, Allan. Thank you.
Since we last spoke in May, you've had a few good news releases out, and I'll just sort of headline them, and then we can get into talking about them. How does that sound, Rob?
Perfect.
So one of those news releases was you paid down a significant amount of debt. I think it was 39%. Then you had a an optimized PEA out, and then you had some drilling results. So we got a lot to unpack there, Rob. You like to look at the bottom line, so why don't we start with paying down some debt?
Sure. We ended up doing a financing in McEwen Copper back in beginning of March. And that gave us, it was a primary into McEwen Copper and a secondary by a sale of McEwen Mining's, some of its shares in McEwen Copper. And we used the proceeds from that to fund some of our operations, but also to retire $25 million of debt, prepaid. It was maturing next August, but we wanted to reduce the debt on our balance sheet. So that was good. It was a 39% reduction. And I kept thinking, about when I was running Gold Corp, we had no debt. When I first got involved with it, there was about $50 million worth of debt. And we gave a heart attack to our bankers because they transferred it across. And about 3 weeks later, we did a write down of about the same amount. They said, look, this is just a book value we're writing down. It doesn't affect cash generation. But they they were running around for a few days going, oh, this is terrible, terrible, terrible. And then anyhow, the fellow who was on that loan is now the CEO of the Royal Bank of Canada.
Oh, wow.
He reminded me of some of that early days.
Well, I mean, you're not a fan of debt.
Yeah, no, I'm not a fan of debt, and I'd like to reduce it whenever possible.
Okay.
So, and at Gold Corp, when I left, we had $400 million in liquid in cash. We had no debt, and we were one of the lowest cost gold producers in the world. So when I think of companies, I like to get some. We need some more high grade, but we're moving in that direction.
Well, that made you one of the best performing gold stocks back in the day, and that was a tremendous cash machine of a mine, super low cost and big margins, super high grade. I remember watching Rob. One of my favorite things was going to the PDAC and looking at your display of rock from underground, just riddled with gold.
Yes, it was a beautiful sight. And you watch people go underground at that mine, and they're picking through the rocks looking for a little shiny piece of gold, and it's a fascination. No, it was good. So, but there's still more gold to be found. You're seeing lots of juniors, or a number of juniors, getting some high grade, and I think you'll see more specimen grades coming out.
Maybe even one you're involved with in Canadian Gold Corp, with you and the dynamic duo of you and Ian.
Well, we've got our fingers and toes crossed. There's a history of some high grade there, and we're just drilling to see if we can find much more of it.
Excellent. Well, they've hit that was a big intersection, and then they just left it after that with very high grade gold. So hopefully that wasn't an accident.
Yeah, precisely. That's why we're drilling. See if we can confirm that.
Since we're talking about gold, McEwen Copper or McEwen Mining has sort of had a big turnaround over the last 8 or 9 months. And a lot of that is due to McEwen Copper. But I don't think people really understand what you're doing with McEwen Gold, the gold side of things. That gold gets a little higher, and maybe people will pay more attention to your gold assets as well.
Yes, they're performing. Our Fox asset, which is in Timmins, is performing a little above what we forecasted. It's been able to get its costs down. Our Gold Bar property in Nevada, they had a flood and some other weather issues that reduced our production in Q2. We actually had to take a boat to get to the operations, and it's in the middle of a great desert. But there was just so much spring runoff that for almost a week, the only way to get across was either by boat or helicopter.
Oh, wow.
I mean, this is a big flat area that was just flooded. So that interrupted a lot of the production. It had a lingering effect in diluting our solutions. Couldn't mine at that time because couldn't get on the property.
Right.
But it looks like we're going to make up the difference in Q3, Q4 at Gold Bar. There was an issue at San Jose, and that again, they've made up what they lost in the Q2. We got projects. We're going to be sinking a ramp at our Timmins operation on Stock West. So new production coming there. And we're building in Mexico. So just we bought a physical process plant at a pretty good price, we think, and made that operation. It's not going to be huge, but a nice cash flow generator. And then we have McEwen Copper that just put out its PEA.
Well, you had some gray hair inducing efforts at your gold operations for a while there. But what you're describing there, you've turned a corner, and the efforts that you're making are paying off.
Yes, there's good exploration results. I think a lot of investors are going to look at it, and they'll look at the bottom line, and we're putting out large losses, and a lot of it is as a result of our McEwen Copper consolidating, because all we're doing is spending there quite aggressively. And since we own 52%, we have to consolidate those results, so all of their expenses show up on our income statement. We're also spending, this year we'll have spent $19 million by year end on exploration in Timmins. And that's an expense that hits. That was flow through money, tax driven money, and that program will end at the end of this year. But the operations are generating positive cash flow. So we're happy with that.
Perfect. And maybe expanding that margin with some of your efforts. And I really think that Timmins stuff has me intrigued, the depth potential as well. That looks like a system that keeps on going.
Well, that, and closer to surface, though, where we're building the ramp, we started drilling, because the ramp we were going to put down starting at the around the mill. And they started drilling around there to sort of make sure they weren't going into any ore, and they've been encountering gold 60 feet below surface, which they didn't know was there before. So that would, defray some of the costs of capital, because if we'd mine it, put it in the mill, it's right there. That's
awesome. That's the nice kind of surprises you need, Rob. We don't want you getting too many more gray hairs.
There's not much more room.
I'm getting a few myself. So let's get on to McEwen Copper, because I'm extremely bullish on copper. I just believe that with all of the demand that's coming, And, you know, I've been watching copper since I got in the business in the early 1990s. And the pipeline of development projects and exploration projects, and also even looking at the mines, a lot of those big mines are ancient now and on their deathbeds. And yet we've got all this new demand coming. And McEwen Copper has an asset that very much looks like a generational mining opportunity. Let's get into the McEwen Copper. The big thing I saw was the preliminary economic assessment.
You know, that came out recently, and we were updating the preliminary economic assessment to reflect current costs of capital and equipment because of inflation that's occurred.
Updating it, but then also optimizing it, I believe, because you had Whittle Consulting doing some important work.
That's correct. So the drilling we've been doing was to increase the confidence in the resource base, which is 1/3 indicated, 2/3 inferred. That resource base has grown from 29.5 billion pounds of copper to 37.6 billion. So an increase of about 27% so far. And then we looked at the economics. CapEx is estimated to be 2.5 billion. The operating costs are we're looking at cash costs of $1.07 a pound. And all in at $1.64. So with the low cost, we calculated it at 375 copper. Copper is about 286 or 386 right now. It has been higher, but that low cost means we'll have a short payback period of 3.2 years, and have a net present value at an 8% discount of 2.7 billion. In the first 5 years, we're looking at EBITDAs of 1.1 billion. And then in the next 6 to 27 years, or the next 22 years, of about 700 millions at 375. And that's only mining 40% of the resource. So when you mention generation, it's generations. It's got an S on the end on it. This is a big property. And I think permitting anything today, you have to be much more conscious of the community and their concerns. And in where we are, water is a very big concern. So the plant that we have, the mine we've designed, would not be your conventional copper mine in terms of a grind flotation mill. We're looking at heap leach. And that has a number of benefits. One, it uses about 75% less water, which is big. It's significant less capital by a couple of $1 billion. You don't have a tailings dam. We looked at a tailings dam on this property, it was going to be 300 meters, which is about 1,000 feet high. So there's no tailings dam, nothing to break there. And our carbon on scope 1 and 2 carbons, we're looking at 1/3 of what a conventional copper mine is. So we're moving along, and the game plan is by 2038 to be as carbon neutral. So we brought an architect in who's very active in the green living building space, and early on said, help us redefine mining. Help us design a mine that would be acceptable to the community, that would contribute to reducing the atmospheric conditions that we currently have. And at the same time, meeting the demands of the transition of the energy to the energy economy.
Okay.
I just view it as let's call it a more responsible way to mine. I presented on that in New York at an SME conference a month or so ago. And I was pleasantly surprised by the very positive reaction that people had to that approach to mining. And hopefully this will become a model for other mines in the industry.
Well, if you're going to be mining copper to help with the carbon footprint of the world, it's an awfully ambitious and exciting opportunity to do that in the fashion that you are looking towards moving in.
So it's looking at copper when you do it. A heap leach process is a lower recovery rate than traditional flotation. But I think that's going to be the cost that mining has to incur to get approvals going forward. And there's a much larger audience looking at it and saying, well, we're going to approve of this or we're not. So
even with that in consideration, you're still looking at being one of the lowest quartile producers of the projects that are in the development stages.
yes, and we're ranked somewhere up. I mean, just looking at the deposit as one of the 8th or 9th largest undeveloped deposits in the world right now.
Wow.
So as you said, when there's a deficit projected in the copper supply, here's a mine that could help fill part of that gap.
And we certainly need a lot more of those kind of projects. And it's kind of exciting to be looking at green gold and mining green gold in a green way.
Green copper, yes.
Yeah, good. The situation with the pipeline, I don't think people really understand how important, how critical copper is for our modern world, and just how much demand is going to come from alternative energy sources, electric vehicles, rewiring the power grids, modernizing a couple billion people to bring them into the standards that we live in. And then you look at the mines and a lot of those, I remember reading a report about 10 or 15 years ago, Rob, where they said you almost had to find an Escondida a year to meet the demands. And that's just not happening. So I think there's a looming supply problem that not a lot of people are paying attention to, but ultimately they will.
I'm afraid there are a lot of people out there that believe the energy transition will happen as quickly as it happens when you turn a light switch on. There's a long lead time and a lot of capital and a lot of approvals that we have to pass through before we're going to get that transition happening. And
right.
I mean, in our electrical grids here, they're incapable of accepting all the renewable power right now. We are, one thing on Los Azules, we do have a contract within our Argentinian power company to provide 100% renewable energy.
Oh, wow. So again, you're looking at doing this in a green way at every step of the way.
Yes. Yeah.
Wow.
So it's quite exciting. I really like the model, and hopefully we just keep pushing that forward.
You know, something else that I kind of predicted, I did predict a couple of years ago, was that I saw a trend that would develop that I thought the end users of copper would start getting more involved with the mining space. And you went and kind of helped prove my prediction correct, because you got a automobile manufacturer. Stellantis is not a well-known company, but they basically have the assets of the former one of the big three automakers.
Yes. Yeah, the merger with Chrysler.
Right.
They're Jeep, Dodge, Chrysler, Peugeot, Renault,
Alfa
uh,
Romeo,
Maserati, and
Maserati.
a couple of others. They're the fourth largest car manufacturer in the world. And so they bought in, they own 14% of McEwen Copper now, which, and they've, yeah, they were looking, they produce 160,000 vehicles a year in Argentina. And they look at it and said, well, right now we have to buy copper that's produced from concentrate that goes through smelters, and we have to import it into the country. Here we can provide it directly to them. And it doesn't have to be smelted. It's green copper, as you mentioned earlier. So,
Well, that not only was I happy to see my prediction correct, but the reason that I made that argument was kind of twofold. One is that I think that these end users are going to have to get involved with mining to cover their needs. But secondly, this world that we live in where everything is moved, we went into outsourcing everything for a couple decades. And now I think there's going to be a trend to insourcing. You don't really want to leave all your mining outsourced and the result of what you mine outsourced to far off countries. And so that's kind of why I made that prediction, and really happy to see you guys get the interest of one of the big car manufacturers.
well, I mean, you've seen some of the big miners go into lithium, some into nickel. Stellantis was the first to go into copper, and it was into our project. But you're right. I mean, you look at the tensions around the world and the disruption to global trade, whether it's due to, war of words right now or actual battles going on and sanctions being placed on various countries, that it's really disrupted those supply chains. And we're going back to a period very akin to when Henry Ford was developing the Model T. And he went to the Amazon for rubber and got Firestone down there. And he was up in Michigan getting copper. He was up in Sudbury getting nickel. And we're just seeing that vertical integration occurring to give them surety of supply.
As they say, history doesn't always repeat exactly like it did, but it often repeats, and we're seeing that now.
Yes.
So, Rob, you mentioned that Stellantis took a 14% interest in McEwen Copper, and you own something in that neighborhood as well. But then you've also got a major mining company involved through their Newton, I think I say it right,
Yes.
Subsidiary or venture. And that is very interesting for a couple reasons. It says to me that Rio Tinto believes that you've got a future mine, but that they can help you with their technology. And anytime I hear that there's the potential for faster production and higher recoveries, it gets my radar going.
Well, right now, Newton is a biological leaching process that they feel they've created enhanced a bacteria that will allow for higher recoveries. And in the most optimistic case, it would be competitive with a conventional grind and flotation circuit that a conventional copper mine would use. But lower capital costs, faster recoveries, higher recoveries, and you're getting it back faster and it's costing you less. So we didn't build that into the PEA because right now they're testing our ore, but we're hopeful that it would have a positive impact on the recovery. So we increase the numbers going forward, but we just have to wait. They've tested a number of other projects around the world, and they feel they can achieve higher numbers. So,
and is there any ballpark when you would hear more about their efforts on your project?
It's probably 6, 9 months out.
Okay,
So,
so maybe in the first half of next year.
yes, and we're pushing the project to a feasibility study, and hopefully by the end of 24, or the very beginning of 25, we'll have a feasibility study completed. We
And
put in our environmental permit application a month and a half ago, and we should hear about that early next year. So it's all moving along quite nicely.
And you've been doing a lot of drilling down there as well. You had some really good drill results out. I always look at cross sections. To one of my old geologist mentors said, always look at where the distribution of the metal is and how much continuity there is. And that's what I see out of these the last news release you put out not too long ago.
Yes, well, what we're drilling, as I said earlier, to improve shift from inferred to indicated, but we're also concentrating particularly on the payback pit. So the first 5 years of production, just getting that down solid. And then we brought Whittle in to look at, is there a change in, could we change the sequence or where we're mining to optimize the situation? And they've been quite helpful there.
They're a very talented group.
Yeah.
That's what they specialize on, right, Rob? They go into projects that have done a lot of work, and then they look to be able to optimize it even further.
That's right. That's right. They're used by a lot of the majors and intermediates.
Good. Well, Rob, thanks very much for the update on the McEwen copper and the gold operations, but I'd be remiss to not ask you a little bit about copper and gold, a couple of things that we both really like a lot. Do you have some thoughts? One thing that I really like getting out of you, Rob, are your thoughts on those metals, but then your philosophy on investing in the space. I think that information is really helpful for my audience.
Well, the summer has traditionally been a quiet period for the stock market, and in particular the precious metal space. And within that space, I have to say that the juniors are still suffering from neglect, and that I've often viewed this time of the year as an opportune time to be looking at situations and purchasing some. It's almost similar to just before year end, if you've had a bad year and you have all the tax loss selling. So here, people aren't paying much attention, and the juniors have definitely underperformed the sector, the gold price or the senior gold stocks. So if we get the move that I'm anticipating, that being gold going much higher, the juniors will come alive somewhere September, October, and they deliver outsized returns. More risk, but when everybody's forgetting about them, and then suddenly gold starts to run, they start, well, what's this high grade mean? Oh, maybe there's there's M&As starting to happen again. You just want to have some positions in the juniors.
One thing that I've noted,
numbers.
I really like that seasonal play. I agree that it's a lot like the end of the year tax loss selling. The end of the summer is your mid-year Christmas period. But something else that I've noticed is one that the valuations are incredibly low right now relative to historic and what they've got in the ground. But secondly, there's a lot of investors, sadly, that like to sell on the lows. And they have pretty much run their course, because in the juniors, you're seeing that the volumes are very low.
Yes.
So we're coming from a very low base, and I think a lot of the sellers are out of the way. So I think we're in a sort of perfect storm for a lot of good juniors out there to to really start rocking and rolling if they can come out with some good drill results.
Well, I can think of McEwen Mining. Last July, it got traded just below $3. And today it's at 9, just over 9. But there was that cyclicality, if you want to call it, that occurs in the summer. And we were depressed because of operating issues.
Right.
But a lot of the juniors, they're having difficulty raising money. It's been like, for many of them, like pushing a string. It just doesn't go anywhere. But they're coming out with drill results that, well, they catch my eye.
Yes.
And as I said, I think it's a time to be maybe adding some to your portfolio.
Your Canadian Gold Corp has my attention, Rob, because I'm a junkie for high grade gold, and especially when you start getting it deeper and in thick intersections, and it's under drilled. You know, you kind of revived that Tartan project, and you've got some holes into it now with pending assays. I'm very optimistic about that system there.
Well, I'm hopeful for it too.
Yeah.
You look at it, what's it trading at?
About
20 cents or something? 25, 6.
20 some cents, yeah.
And it wasn't too long ago I put money. I mean, I like the project because it had been a mine. It closed. So there's a road into it. There's power into it. It had its permit. So it's not an advanced exploration story that wouldn't take a lot of money to put it into production if you hit something.
Right.
And it had a number of very high grade hits. So our drilling right now is to see if we can find more of it. But a lot of the risks that are associated with an exploration property aren't there.
Right.
So I guess it was trading around 4 cents, and how was it, 3-4 months ago? Less than that.
Yeah,
And
exactly.
it's 26 cents right now.
You know, going back to my mentor in geology, he telling me about watching the distribution of gold in a system. What really stands out to me is if you look at the mining operation and you look at the distribution of the highest grade, there's a core there that is going right down to where only a couple of holes were drilled historically. But that zone is pointing right down there. And then you've got that high grade over a thickest, it looks like it could be expanding as it gets deeper.
We all wish that happens.
Well, it won't be too long before we see some more assays to get more information about that assessment.
Yes. No, I think some people should look at this resource sector as similar risk to the tech sector, and some of the returns can be oversized like the tech sector delivered.
I like the sounds of that. Rob, as always, you've been really kind with your time, and you give us a lot of good information about your own companies, and also good information for my audience as investors. And thank you very much for coming on again.
Happy to be on, Allan. Thanks very much for your continuing interest.
I can't, I love what you got in gold and copper, Rob, so I really can't help myself.
Well, we're going to look after one's, wealth through precious metals, and we're going to look after the climate with copper. So,
and I think copper is pretty precious as well.
I'm not going to disagree with that at all.
Let me close it off and we can have a brief chat at the end there, Rob.
Sure.
So there you go, folks. In McEwen Mining, you've got a turnaround story on the gold mining operations. As Rob said, they're reducing costs and improving their understanding of the grade distribution, and even finding some very nice surprises. And I think they'll continue to move in that trend with their projects on the gold side, but then they've got a tremendously exciting copper asset that McEwen Mining owns 52% of. The other 48 is almost split up three ways between Stellantis, a major car maker, Rio Tinto's Newton, and Rob McEwen himself. As Rob said, it's in the top 10 of undeveloped copper projects in the world, and also in the lowest quartile of that group of undeveloped projects. This is a project that the copper mining world needs, as well as the consumers that need copper to make all the things that they want to: alternative energy sources, electric vehicles, rewiring the developed countries' power grids that are greatly in need of it. I mean, if California alone went into electric vehicles the way they are, and they all plugged in their cars at 5 o'clock after work, the power grid would be dramatically strained. And then you've got the developing world that needs to move into the modern world, and they need a lot of copper. So copper is the most critical of base metals. And McEwen has a special project in McEwen Copper for copper. I invite you to take a look at them, because I think that McEwen Mining is undervalued just for their gold operations alone. You put things move in the right direction for both the copper and gold, and I think it offers a tremendous investment opportunity for investors. As always, my shows are for information purposes only. It's important for you to do your homework, speak with your financial advisors, and I'm a really big proponent of doing that homework. That's why I do these shows, to sort of launch you into your due diligence. But go to their website, check out their news releases, check out their corporate presentations, and give the company a call. They have some good people there that love to tell their story. On that note, have a great day, and we'll talk to you soon.